Good night, everyone. Today's Thursday, November the 3rd, around 9:30 p.m. New York time. Guys, we're going to start with a daily technical video update. As you guys know, tomorrow is the non-farm payroll, and we're expecting that due to the non-farm payroll at the consolidation stage that we have been for the last 2 days or 48 hours, we're expecting the market to make some type of move tomorrow. Now, what we're expecting on the market is a continuation of the move that we have on Monday. And then after that, we're going to see if the market is going to decide to renew a trend in favor of the risk aversion and the dollar, or the market is going to keep going with the gain of the traps when it's making traps, it has been making traps for the last year and a half, when every time that a dollar that is some issue, then there comes the risk aversion, and everyone thinks that the war is coming to the end and there is nothing more than the trap. So too early to tell if we are in front of another trap, but there are being some type of early hint that they're saying that probably we are in another trap. But for us, let's not worry about it. Just worry about it that at least another leg in favor of the reservation should happen. Now, why do we base that? We base that starting base in copper. Now, let's start with copper. Copper is showing 1, 2, 3, 4, 5 swing. 1, 2, 3 swings back, corrective, and then we're expecting copper minimum to drop in 3 ways to around, I would say 335, 334 area. I mean, that's what we're expecting, and like we explained today, on the seminar, if we take a look at copper in the daily chart, our preferred account is calling this to be, our preferred account is like this. It's calling copper to have ended a wave W. In other words, copper is recovering, correcting the move like oil did from the highs in 3 ways, and then it should reach 384 level before another significant drop to the downside. That makes the case in copper that probably what we ended is the first leg of the correction, and we're gonna get the second leg and the third leg higher before a significant or a secondary top is created. That right there is telling me that for sure another leg in reservation is gonna happen, and that for sure, or not for sure, most likely the market is on the B way of a biggest degree correction that started in May the 4th. I want you guys to understand our thinking as it is right now, but let's not run before we work, and let's see how the market reacts after another leg or reservation. Now, today the dollar has been consolidating the gains that have between Sunday, Monday, and Tuesday, and the decline loose corrective, like been saying all over, the recovery right here on the dollar loose imports, but has a lot of question marks. So let's keep that in mind right there. And then I want to see the dollar when it tests 76.51, 76.19, or 75.84 before going higher in the other legs or reservation. Taking a look at the dollar in the higher degree, what you can gonna see is this. You see a 3 ways down, and I want you guys to pay attention to the message. right here. It says the US dollar definition to break either side. And in that way, we're going to define which one of the three weekly counts is the one that is in place. Either the nest, the diagonal, or the biggest triangle. So far, no definition. Now, minimum we're expecting A, B, and C, but like I say, everything is possible, and I'm not very sure on these 5 weights due to the fact of the divergency, but the recovery here looks corrective, meaning that another leg higher, it should be Sienna copper, another leg higher can be possible to around 78.61. From there, we're going to see if the dollar is going to break higher in the powerful wave 3 of 3, or the dollar is going to go down and do shoppiness, diagonals, all the things that you guys know for the weekly. Now, oil, the same. Not too much today. And we have 2 counts in oil. This one, we have labeling as the bearish one, the one that when oil is going to drop from here. Like we mentioned today on the forum, when you have a 3-way move, the high is the high. In a 3-way move, oil should be ending on the RSI. Oil should have been done right here. That makes me to believe about the alternative count that we have when it's a bullish oil or a count that is going to go for higher price. That's the case, then oil is in this. Oil is going to go like A, B, C. We got in W, and oil is leading the path. And then the next leg of the reservation right here is going to prove to end a flat S before oil is going to go higher. So, like I say, guys, the market is a toss. Every pair that you can see can be counted as a continuation pattern or can be counted as a continuation patterns on the risk trade and being now in the corrective B way, or everything can be counted like the war is going to get to the end. So in some degrees there is a lot of ifs both ways. So you play the Elliott Wave aging, and the Elliott Wave aging is calling for another leg or reservation before if in the case risk is gonna get another legs. I hope you guys understand. Now let's move on to the individual pairs pretty fast. On the individual pairs, guys, we're gonna start with cable. Cable, it looks like this cycle ended already. You can trace a channel, and the cycle, it was a well-defined channeling cycle, ended, and now we are in a downside move. Now, I want you guys to understand one thing, that this high not necessarily needs to be the whole E way. We are laboring as a E alternative A. And then in cable, you're going to have 2 ways around. You're going to go to 57.17, 56.11, and bounce, or it's going to go lower. You guys understand already. You guys know the weekly triangle, and this is the 618 of the D way. So technically, that can be the case. Now, what is noticeable about cable is that the euro and the dollar, they both reach the same with the Australian dollar, with the dollar CAD. They went very deep within correcting the previous move. Cable not even reached the 3802. That's telling me that this leg should happen, and consequently the legs on the euro, all those pairs should have a fair leg minimum. And that's the message that I want to send you guys. Don't think about the crash. Don't think about the world coming to the end. Think about Elliott Wave aging and another legs in reservation coming to the market very, very soon. That's why we are presenting to you guys, and that's what we're favoring in this market today. Now, that's cable in the 4-hour. If we take a look at cable in a 1-hour chart, it looks like that from the top, cable is doing like a flat. How comes the flat? It comes like A and 3, 1, 2, 3, 4, 5. I mean, this is a three-way move, or this can be W. You can count it both ways. And then from here, I can see 1, 2, 3, 4, and then 1, 2, 3, 4, and I see cable going higher to 161 or 161 area before going lower in another legs. That's what we like in cable. Now, the Singapore dollar, which is a trade that we have, we present all the alternative on the Singapore dollar today. I want you guys to understand that there is only one scenario that can be against us, which is that you got A, and then you got A, B, and C as a flat on the B wave. But well, I don't see it happening. But well, it can be possible. I like the C wave related to in a flat. If the move ended right here, and you got 3, 3, and 5, technically speaking, I like my B wave. I like it related to the A, no more than the 1.236, and it's almost right here at the 2%. So I don't think it's the case, but you have, in the 1 hour, you have two alternatives. In the Singapore dollar, you have two alternatives. The first one is this one is that the top is the top, and we ended wave 1 right here, and then from here we're going to get A, B, C, and higher. The other alternative is a flat when you end it here. Do not matter, it can work both ways, and then you got A, B, C, and it ended here at the 50% of this, at the 50% of the whole move, and then from there the market is going to start buying the Singapore dollar pretty soon, and then it's going to go higher. All depends on the dollar index, and in some degrees of the euro crisis or whatever euro soft opera is taking place, and how the euro dollar move. Now, the euro dollar, I want you guys to point out 2 or 3 different scenarios. The euro dollar can be in this degree. I can see so far from the lows 1, 2, 3, 4, 5, 6, 7 swing. Now, every 7th swing and everything needs to be a correction. It comes in 3 and 7-11. So technically speaking, if this count is correct, you got A, a flat B, and then C, this is W. And then if this count is correct, this lead looks to be in 3 ways, and then that being the case, and then you're going to get another 3-way here to complete a 5, to complete a 7 swing, technically completing, because you can label this a whole swing. Now, also, it can be counted different ways. It can be counted like this, when you have when you have, let me remove it, this is gonna get back here, then you got the B here, and then this is the high, and then if that's the case, look, almost completed, because if that's the case, what you got is 7 swing. Now, that cannot be the case as it is right now. Why? Because this move right here is a phi, making the case that the C wave needs to be a phi. As of right now, all you got is 1, 2, 3, 4, and maybe the market, the fastest way to be completed is that the market does this. And then today, the market makes a new high and goes to 38.80, and then from there, the market drops, and then you have A, B, Z as a double zigzag. Like I say, it's very iffy, but also I want you to point it out, they look like a bear flat. And on the bear flat, the market consolidates within the channel. And then if you take a look, and you put the bottom line of the channel here, and you put it on the top, that's why you see that the area around 38.50 is getting a lot of resistance there, is because the channel between the two highs right there. Now, like I say, so far 7 swing. I can allow a small swing right there, but if you see this, most likely in order to be completed, you're going to get this. And then you're going to have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and 11 in order to be completed. That's what I see about the euro. So the area between 139 and 140 can found resistance right there. Now, let me show you the euro pound. Let me show you the euro pound there. On the euro pound, very interesting. What the euro pound is telling you, 1, 2, 3, 1, 2, 3, and it looks like it's going to trade this, and it's going to trade this, which is telling me that the euro is not done. That's telling me that the euro is not done. In some degrees, that's what it's telling me, that the euro is not done. And you need to see the euro pound around 87. You need to see the euro pound around 87 before you're going to see any type or drop in the euro as a group, because this is the only or the most clear structure, 5 ways structure in the whole euro group. Now, on the metals, we are labeling the cat as a nest, but I want all you guys to understand that all we got in the cat, there are 3 ways to the high. So think about it. We're labeling as a nest. I know it can be forced in some degrees, but this wave 2, proposal wave 2, is too big to compare this to a small wave 4 right here. Now, New Zealand did a very nice 5 ways structure from the high. Very nice. 1, 2, 1, 2, 1, 2, 3, 4, and extended 5 of 3, a 4, and a 5. New Zealand do a nice, and New Zealand also trade higher. That's why we believe that the correction in the dollar is not done yet. At least in my eyes, the correction in the dollar is not done yet. Aussie, I mean, as much as we want to label Aussie as a 5-way move, to be honest with you guys, the RSI is showing a nice divergence, but I see 1, 2, 3, 4, 5, 6. I see 7 swing to the downside, and even worse, I see 1, 2, 3, 4, 5, 6, 7 swing on the C wave. So do not matter. I'm gonna label it like A, B, C, W, S, A, B, C, A, and I see Aussie going to around 105.38 before going lower again. So overall, guys, that's what we see for the market, and we are still favoring the dollar bull scenario due to the fact that most of the correction they are showing, they look very corrective, and we are expecting a move in reservation, but from there we need to wait and see which way and which direction the market is going to take. All right, so let's leave it there and get back to you guys early tomorrow.